Hello and welcome to another edition of Your Money, Your Life. I'm Alfred Edmond Jr., Senior Vice President and Executive Editor at Large at Black Enterprise. And this edition of Your Money, Your Life is brought to you by Prudential. Today we are talking about setting an investment agenda for wealth creation. Listen, we all do our budgets, and too often we budget and we do not include planning for investing in our budgets. And as a result, when it's time to invest, we say, oh, I can't do it now. It's not in my budget. I don't have the money to do it. Here we want to talk about how you can approach your budgeting with investing in mind, putting aside resources and planning for your investments as part of your budget so you can integrate investing as part of your overall financial planning strategy. And we couldn't have a better guest to have this conversation, a better expert, a good friend of Black Enterprise than Allan Boomer, Managing Partner, Chief Investment Officer of Momentum Advisors, and the co-host of the Momentum Advisors podcast. Allan, thanks for joining Your Money, Your Life.
Brother Alfred, as always, man, anytime you call, I'm coming, man. Thank you for having me. I think you're a giant in your own right, and I just appreciate you, brother.
Oh, thanks, bro. Likewise, mutual admiration. So let's start out. What's happening with you? What's happening with Momentum Advisors? How are things going? How do you see things going for your firm, for the economy, for the investment environment as we move through
Yeah, sure.
toward the end of 2022?
Sure, man. Thanks for the question, man. We just celebrated 10 years in business, which is amazing. We are an independent wealth management firm, so we do investments and financial planning. And yeah, we hit 10 years, man. We're one of the largest Black-owned wealth managers in the country, and just super proud. Our team's diverse, and we're changing a lot of lives, man. But in regards to the global economy and what's happening, I mean, clearly things are slowing down. Inflation is running rampant, interest rates are high. But at the same time, I think it's a great time for folks to be thinking about investing, despite all the negatives that you see in the newspaper and on television.
What is you see as the kind of the outlook? I agree with you. It's a great to me. It's always a great time to invest. It's just about how you do it
Yeah,
depending on in the marketplace. So that's a consistent message that it's always a great time to invest, and it should be something you do as part of your regular blocking and tackling of financial management, not something you wait for special
uh-huh,
occasions to do. But but
yeah,
but what do you think is the healthiest mindset? Let's put it that way for the current
sure.
environment so that you don't get discouraged, you don't pull back, you don't become undisciplined financially, and you still remain committed to investing.
Yeah, for sure. I think you got to think about, well, what is investing, right? Because I think for a lot of us, especially in our community, we don't have the right relationship with investment. When we hear investment, we hear risk, we hear lose it all. I think in other communities, when they hear investment, their eyes get big. They hear opportunity. They hear about money that they're going to make, right? So an investment is anytime you take your money, you mix it with an opportunity, and you give it time. And that time factor is the thing that I think most of us struggle with is giving it enough time. But at the same time, we're okay giving other things time. We're okay letting a career develop over time. We're okay building a family over time. We know that it will take time to make our mark on the world through our leadership, through our philanthropy. So investments is one of those things that requires time. There's always a good time to invest, right? Like I will say sometimes they're probably a little better than others if you can look backwards. But when you're in that moment, it's hard to really know. So you got to be investing at all times, understanding that if you're investing all the time, you're going to catch those good times in there as well. You just don't know until way after the fact if it was a good time to invest. But some of the things that I like right now is just the idea that folks have cash in their pockets. Folks are spending money, even though rates are higher, even though there's inflation, consumers are in a strong position. And so that's very different than a lot of recessions that we've been in the past. And ironically, Brother Alfred, Momentum Advisors was started right at the end of a recession. And some people thought we were still in a recession. And again, we've had an amazing run, and it goes to show that sometimes it's just about making sure that you're taking that plunge as an investor, not trying to time it perfectly because you never know when's the perfect time to invest.
You make a great point. Black Enterprise, in fact, was started during a recession in 1970, and I know at
Yep.
one point we counted, and it's probably now, this might be the 10th or 11th recession, assuming that we're going into one or in one, since the founding of Black Enterprise. But
Wow.
you didn't
Yep.
shut down Black Enterprise when the recession happened, then reopened when the recession was over. You continued to
Of
do what
course
you
not.
do, and that brings me to the other thing that I had to learn from personal experience as I became a more educated investor was that it's not about timing, but about time, is what you said. It's
That's
not about
exactly right.
timing.
Timing is
It's like
time in
about
the
time in.
investment.
It's about time and
That's exactly right.
letting time go by and being consistent over that time. And then once you understand that, then you don't get afraid or scared away by words like recession and inflation.
Yeah,
It's not about the timing of the
yeah,
investment. It's
it's
about
not.
putting time
That's
into the
exactly
investment.
right.
So,
Yeah.
so,
And you know what's so funny on that note,
yes,
Alfred, I'm sorry we're getting off topic,
no,
man,
no,
but
no.
you know,
Everything's on
we
topic, bro. Share.
yeah, no, we did an episode recently on our podcast called If There's a Recession, You Can Choose Not to Participate,
Mm,
because it's optional, right? Meaning like it's going to affect everybody in some ways, but it's going to affect more people. I mean, more, some people are going to be really, really impacted by it. For some people, it might be inconvenient, and for some, it may not even be a thing that they choose to acknowledge. And, you know, some of the stuff that we talked about is the notion of now's a great time to think about starting businesses as folks are retracting, right? As folks are pulling out of investments, now's a great time to get into investment. So it's really thinking counter, just like Black Enterprise was started during a recession. Momentum was started during a recession. If you think about this amazing bull market we've seen in stocks, it starts with a recession. It starts with a pullback. Like if you think about folks that were able to buy a home in the last few years and their homes have appreciated. The reason why is because there was a pullback, right? So those pullbacks create great opportunities, but they're not the times to pull out, right? Those pullbacks are chances to maybe pivot a little bit, right? I'm sure with some of the economic recessions that you guys have experienced at Black Enterprise, you just do things a little bit different, but you don't stop, you don't quit, you got to keep going.
you reminded me of a friend of mine says you don't build a building starting at the penthouse. Nobody who starts
No,
building anything starting at the top. You start at the bottom, at the basement, and in the case of investing, that means you may be starting out when the stock market or the economy is low, because obviously, like you said, that's the time to start building because obviously it'll go up. So again, you don't start a building at the penthouse. You start in the foundation. You start at the basement.
that's right.
Yeah.
Absolutely.
And one of the things I love about having, we love that you're a friend of Black Enterprise. You've spoken at our events. You've moderated sessions. You're obviously a guest on this series. Is that your investment mindset, which I guess, given what you do for a living and for your business, is it makes sense. Is one of opportunity. I've never talked to you, no matter what the economy is doing, and you're like, man, whew, this is not a good time. It's always a good time. And you just talk about it's just a matter of how you approach it. And obviously, you're an entrepreneur in your own right, beyond Momentum Advisors. But talk to me about your overall investment philosophy, both as an entrepreneur and a investment expert in the space, but also as an entrepreneur and just someone who sees opportunity in the change
Yeah.
around you.
No, thank you for that. I mean, we talked about the first tenet, which is time. I think the second tenet is really understanding. It's making sure whatever you get into, you endeavor to understand it. You know, there's nothing worse than losing money and not understanding what hit you. Just like I don't want to make money if I don't understand what happened, right? So I think that second tenet is really understanding. I think the third is this notion of value. It's understanding I'm buying an investment, but what am I really paying for that investment, right? Like, how am I going to get my return? What sort of return expectation will I have based on the value that I'm buying, right? And so that's another big one. But there's always opportunity. You know, I'll tell you, opportunity is one of those things that doesn't knock; it just sits there. I'm reminded of a time I was on the subway. Alfred, I tell this story. People don't believe me that this happened, man. I'm on the subway, and it's a packed train in New York City, and there's literally a $5 bill laying on the floor. I've told you this story before. You're smiling. $5 bills laying on the floor, packed subway train. Everyone's looking at it. I walk up and grab it and put it in my pocket. And everyone's like, "Oh, I saw it. I should have got." I see their look of despair in their face, like he beat me to it. That's how opportunity is. Like you
Mm,
see these windows of opportunity, and they're just laying there. And people, I wish someone had never said opportunity knocks. It doesn't knock, it just lays there, and you can take advantage or not. And when it comes to investing, right? Like you talked about budgeting for it, right? Not waiting until seeing if you've got some money left, but putting money away first for yourself, for your future, for your family, for your older self. Putting it away first, and that's an opportunity in itself, right? Like money is not just for spending. I think that's one of the biggest things that we've got to change in our community. Money is also for saving. Money is for investing. Money is for philanthropy. Money is for so many other things besides spending, but that's the first thing that our mind goes to. So a lot of times the opportunity is just realizing that I've got some money that I could put aside that I can sacrifice today for an opportunity to have even more money tomorrow. I can sacrifice today. I can also give it enough time. I can be patient enough to wait for that investment to come to fruition. This is a different way we've got to think about money if we're ever going to change some of these wealth gaps that we have in our community.
That's a perfect thought and a perfect idea for a pause for the cause. Listen, we're going to come back and continue this conversation, and we're going to talk about specific things you could be thinking about when it comes to budgeting to invest, not budgeting and then trying to find money to invest. But in the meantime, Prudential knows the importance of having a rock in your life because everyone needs a rock. A rock can help turn the far-fetched into within reach. When you have one, you can reach your potential, your dreams, and your goals. And when it comes to your financial goals, Prudential is the rock you can rely on. With their knowledgeable financial professionals, Prudential can help you get to new heights. Plan, invest, insure, and retire. Visit Prudential.com. Who is your rock? So yeah, Alan, I mean, again, you hit the nail right on the head. Once you appreciate that money is not just for spending, then that changes your budgeting mindset. So you're saying, I'm not just
Mm-hmm.
budgeting for bills that I have to pay and obligations I have to meet and debt that I need to pay down, but I'm also budgeting for investing, for philanthropy, and for other means and uses of money that, again, when you're really embracing the full idea of financial wellness and financial empowerment, you recognize that money is a tool that can be used in a variety of ways. But
Yes.
specifically, talk about what would you advise people if you're and tips you can give them to get them to think of investing on the front end of budgeting. What are some things?
Yeah, sure. Yeah, I think the biggest thing we've got to adopt is this idea that investing is putting your money to work so that you don't have to work so hard. Like for all of our clients, we say, look, wouldn't it be great if one day we know what you can do. We know what you can earn on your W-2 paycheck. But wouldn't it be great if one day there was a competition where your investments, I mean, you're earning what you're earning, but your investments are trying to beat you. Your investments are trying to out earn what you've earned at your day job. And when that day comes, when your investments are earning more than what you can earn at your work, you can retire really comfortably at that point. Or when your investments earn more than what it requires for you to live in a given year, right? And so we've got to be creating this sort of competition with ourselves. And it starts with building up some principles. It starts with having some money and being comfortable, being good with seeing six figures in a retirement account, it's four or five figures in a brokerage account. Because that investment is when your money is bringing you more money. Like your money has a job. Like part of its job is to be there when you need to spend it. Part of its job is to be there to protect you. But a big part of its job is to go out and bring you more, right? Like your money needs to go out and come back with more. And that's that concept of investment. So the biggest thing we always tell folks is if you've got an employer that has a 401k plan, make sure you're putting money, the most money you can put into that plan. Not the most that they will match. Hear me, there's a huge difference, right? They might match 5%, but that might not be enough to get it done for you. If you're allowed to put in 20,000, 26,000, 21,000, make sure you're maxing out putting that amount in. Beyond that, even if you don't have an employer, that's no excuse for not saving for retirement. Open up a retirement account, open up an IRA, an individual retirement account, or a Roth IRA, which is great for younger folks who have a long time horizon because you'll never pay any income tax on a Roth IRA contribution. So it's thinking about taking advantage of those retirement vehicles. And then once you've maxed out on those vehicles, then moving on to a brokerage account. A brokerage account is just like a savings account, except the big difference is you can buy investments in that account. And so that should be the next bucket that should be filled up as well. And then even buying real estate is a great bucket to fill up. Your personal home we think is a great investment. Beyond that, buying investment real estate. Additionally, that's another great store of value, another great place to put money.
So, Alan, one of the things that I kind of learned later in life, and then I said if I had to do it all over again, I would do this in terms of budgeting for investing. Because again, when I was a younger person, I budgeted. I didn't know anything really about investing until my early 30s, after I got into black enterprise and gotten exposed to financial experts and all that kind of stuff. So I budgeted without any thought of investing. And then I started really, learning about that as I went. But I say now to people, especially younger people, in addition to the emergency savings fund, that of course is kind of personal finance 101 when we talk about advising people that you need to have 6 to 12 months of living expenses set aside in case you lose your job or have some other emergency, that's in a cash reserve. What I now tell people is you should also think about having what I call an opportunity fund. Because often we know that we want to invest in something, whether that's the down payment on a home or we want to start a business. But too often we haven't put aside money for that. So when it's time to do it, we say, "Oh, I don't know where I'm going to get the money from to take advantage of this, to invest, to start my business." So I tell people now, even if you don't know what you're going to invest in, set up this
Hmm.
opportunity fund and just put some money in it, $5, $10, whatever you can afford, and let it build. Because a day will come, whether it's I'm ready to buy a house, or I'm ready to start a business, or I'm ready to get serious about starting an investment fund above and beyond my 401k or whatever. And instead of saying where I'm going to find this money, no, I have this opportunity fund that I've been building all along for the occasion of, as you said, the opportunity to invest and to put my money to work. Now that's
Yeah,
again, the thing that
I
I
like
wish
it.
I had done. But talk to me about putting money aside, even if you don't know yet what you want to invest in. Even if you budget it and you just call it my opportunity fund, and you don't know
Yeah.
what you're going to do with it. Is that a wise thing to do when you're budgeting
Yeah,
for
no, I
investment?
agree 100%. I think you would rather, when you start thinking about if I make a mistake, I would rather have money sitting aside versus not having it sitting aside. Like if there's an opportunity, I'd rather be ready as opposed to not ready, And, a lot of times when we think about what to invest in, we're not sure what we want to invest in. Well, the beauty of like the stock market is, I always tell people to buy things that they understand, like, and companies that they're already spending money with. If you're buying Nike shoes all the time and an iPhone, why not buy Apple and Nike stock? But let's imagine for a second, I don't know what companies I want to buy. Why not buy all of them? Like now you can buy in one fell swoop with one actual investment. You could buy all 500 of the largest stocks in the US stock market. But why not? Like, why not put money aside that you want to grow and you don't yet know what you want to use the growth for? You'd be way better off to be in that position because that's how legacy happens. But the only thing I would change, Alfred, in what you said is it's not just putting the money aside; it's also investing it. Because I think that's the big disconnect that I see in our community. I think on average we're pretty good savers. Like we can put money away, we know how to sacrifice, we know how to budget on average. Not everybody does, but I think on average we're good at putting money away. But the big disconnect is actually putting it into investments where it's going to grow. Because you're not going to be able to save your way to close the wealth gap in your family. You're going to have to invest because you can't just do it alone from working, right? Because your investments need to go out and bring you more money. And we give this example all the time of, someone who saves $150,000 over the course of 30 years. If they're investing over that same course, they're actually going to end up with over $500,000, like over triple what they're actually saving. And that's just saving like $5,000 a year, right? You're over 30 years, 150K. That 5K turns into 500K if you're investing it. If all you're doing is saving, it's pretty much going to stay where it was. And because of inflation, it's going to be worth a lot less when you go to spend it. So we've got to not just save for that opportunity fund. We've got to invest for that opportunity fund. We've got to put that money into investments. If we don't know yet what we want to invest in, buy all the investments. You can, through one fund,
Right.
buy a diversified basket of hundreds of stocks through an exchange traded fund, a low cost investment vehicle that will hold that money and grow that money until you figure out a better place to invest it.
And you make a great point. Most of successful wealth builders, they don't take money from savings to investing. They move money from one
Yeah,
investment to
that's right.
another investment based on what the market is doing. So you're right. It's not saying saving money to put it aside. It's investing, putting aside money for investing. For now, like you said, a index fund or exchange traded fund is a great place to do that. But again, when you look at great wealth builders, they're like, okay, now I'm going to liquidate some of these real estate assets to put it into the
Hmm.
stock market, or I'm going to sell some of these stocks to buy bonds. They're moving investment from one place to the other, not from savings to investing. That's just a great way
Yeah,
of
you
thinking about
should
it.
be. You should
Listen,
always be
Alan.
talking about what did I invest in? What talk to your friends. What's the last thing you invested in?
Mm,
What are you investing in right now? These are
mm.
conversations we've got to start having on a regular basis. It can't be a one-off thing every 10 years we talk about it. We got to talk about it every week.
That's what we're talking about. And that's what Your Money, Your Life is all about. Alan, listen, I'm so grateful that you took the time to once again be a part of this conversation. Tell our audience what's the best way they can stay on top of what you're doing, what Momentum Advisors is doing, social media, website. What's the best way for our audience
Sure.
to
So our,
follow
our
up?
podcast is on all the podcasting platforms. You search for the Momentum Advisors podcast. Our website is momentum-advisors.com. We're on Twitter at Momentum Advice and on Instagram, which we barely update, but Instagram is the Momentum Advisors.
Listen, you heard it, everybody. We got to keep this conversation going on this show, on Alan's podcast. The content is out there now. It's different from our parents and our grandparents' generation. Now we just need to make this a part of our everyday. It needs to be part of our culture. We talk about protecting our culture and profiting from our culture. This has to be part of our culture. Alan, thank you for joining Your
Brother
Money, Your
Alfred,
Life.
thank you for having me. Thank you, Black Enterprise. Thank you, Prudential.
Again, this is another edition of Your Money, Your Life. I'm Alfred Edmond Jr., Senior VP, Executive at Large at Black Enterprise. This episode of Your Money, Your Life was brought to you by Prudential. And listen, let's keep this conversation going. I'll see you next time on the next edition of Your Money, Your Life.